Hello everyone, hope you're well, hope you're doing alright. So here's what we're going to be doing today. First of all, I'm going to be showing you a trade that I saw with one of my students that I told him not to take. And then I'm going to, inside the video, I'm going to explain why did we decide not to take it. And then by the end of the video, I'm going to come back and I'm going to explain to you what would have made that trade better. So how I would have taken it. So first, I'm going to show you what not to do. And then I'm going to show you what to do instead. Let's get right into it. EuroCAD right here, we have this bear setup through to the downside right here, all the way down into these bottoms that can play out at the moment for EuroCAD. Now let's analyze the TET capital report for EuroCAD. Now on EuroCAD right here, we are bullish on the investor horizon, we are bullish on the swing horizon, and we are bearish on the day trading horizon through to the downside right here. And we are bearish from a liquidity perspective, from a TC perspective at the moment. So as I go back and I look at EuroCAD right here, we can see, as you can see about liquidity, there's a lot of liquidity through to the downside. There's these lows right here, there's these lows right there, there's this low right here, through to the downside right here for EuroCAD right there, targeting all the lows through to the downside. Now, looking at the investor horizon right here, what can we see? We can see that the market finally pushed into this 1.57 area right here through to the upside, and then, or 1.55 if we want to look for a much better psychological level. The market then broke through to the downside, so gave us a sign of reversal, told us, look, I'm going to reverse through to the downside right now. Let me delete some of the drawings here. Okay, so the market took that psychological level through to the upside and then gave us a sign of a reversal through to the downside, then pushed through to the upside right here, and basically what it did is it gave us a fake reversal. So this push through to the downside is a fake reversal through to the downside, and then the market pushed through to the upside right here, and then we might be targeting the next level of liquidity, which is the next psychological level right here, which could be the 1.60. So we could be targeting this zone through to the upside right here, pushing all the way up into it from the investor horizon. Now on the swing horizon through to the upside, we also have seen that on the swing horizon we have some bullishness, and the bullishness on the swing horizon right here is very straightforward as well. The market created these stops right there, then pushed right above them right there, liquidated them through to the upside, and then pushed with momentum through to the downside, indicating for us that we just liquidated through to the upside and that we are right now just going to reverse through to the downside. And then guess what? It told us, no, I'm not going to do that. This is a fake reversal actually, and I'm just pushing through to the upside right here. Now, from a more micro perspective right here, we can see that as the market was pushing through to the upside right here on the day trading horizon, the market created pushed through to the upside a drive, a second drive, and a third drive through to the upside, which created this bearishness on the day trading horizon through to the downside, which is why we got offered this bearishness right here through to the downside, which is the bearishness that exists in that three drives pattern through to the upside into this high. As you can see, look at this drive, second drive, market created these stops right here, and then boom into these stops, and then started going through to the downside right here, offering us bearishness, a possibility of going all the way down. So obviously I am not going to take this trade for EuroCAD. Now the reason why I'm not going to take this trade for EuroCAD is the fact that we created some swing horizon bullishness right here through to the upside, and the fact that we created some investor horizon bullishness through to the upside into this 1.60 area. So I'm going to be staying away from this trade on EuroCAD, even though the lower time frames are offering us bearishness, which we might be tempted and enticed to take that trade and be like, okay, you know what, we are bearish through to the downside, we're about to take this liquidity through to the downside. It is enticing, but the higher time frames are bullish, and right now everything else is saying no. It's only the three drives pattern and the day trading horizon and the bearishness that exists here, and the liquidity that exists through to the downside, the TC liquidity, the trend lines through to the downside right here, say that the market is going to go down, but everything else is saying the higher time frame, which is the swing horizon and investor horizon, are saying no. So I'm just going to listen basically, and I'm not going to be taking this trade, even though it is tempting and it is enticing, but I'm not going to be doing so. We're going to stick to this system, and we're not going to be taking this trade. So that's it for EuroCAD. فسماح اختصار مفيد. Hello everyone, hope you're well. See this trade right there, market pushed through to the upside, and therefore I'm glad we avoided taking this trade. First of all, I want to present you with a reason, an additional reason, as to why I didn't take this trade and what would have made it better basically. Now, second thing I want to talk about is the psychological aspect of that trade. So let's talk about the psychological aspect first and make you wait for this so you watch more of this video. Okay, anyway, so the psychological aspect of this trade is that, here's the thing guys, this trade is amazing. The presentation of that trade, the market created these highs, grabbed them, then pushed through to the downside. It's amazing. As a trader, you have to look beyond the shiny presentation, beyond the things that you like. Your brain is trying to look for a reason to take that trade. And therefore, when it sees that, it's like, that's amazing, I want to take that trade. So you have to force your brain to look for a reason not to take this trade, so you're logical, right? Because your brain has a bias where it wants to take a trade and it wants to be in a trade. So you have to force it to find a reason not to take it if that reason exists. And therefore I forced my brain to look beyond that shiny presentation, and we looked at the higher time frames, we looked at the TET Capital report, and all was good. We saw that the higher time frames are bullish, and therefore we decided not to take that trade. And therefore, when you see a trade that you really like and you're tempted into taking it, before you take it, ask yourself, is there anything, I don't need to write it, is there anything that turns me off about this trade, basically? And then you go ahead and you verify that and you decide whether you want to take the trade or not. That's number one. Number two is, what would have made that trade better? What is the real reason I decided not to take the trade? Now you see that the higher time frames are bullish, of course. And then you're like, okay, Roy, you didn't take that trade because the higher time frames are bullish. That's obvious. However, sometimes I would take trades where the higher time frame is bullish and the lower time frame is bearish. I don't mind that. I don't mind taking a retracement trade. Even if the higher time frames want to be bullish, we might retrace through to the downside and then the higher time frames can be bullish. That's totally fine by me. I do it a lot of times. Now, the real reason I hate this trade from a statistical standpoint, I don't know why it happens like this, but it happens like this. So let me delete shit. I'm going to ask you a question. Why was this trade? Why are we taking this execution? Why do we like this execution? We like this execution because the market pushed through to the upside, grabbed these highs, and then it started pushing through to the downside, right? That's why we like this execution. Now on the day trading horizon, as we've analyzed it previously, the market presented us with a 3 drives pattern, right? 1, 2, and 3, and finally grabbed through to the upside with that 3 drives pattern right here, with that third drive, and then it started pushing through to the downside. And therefore, the day trading horizon, right here, day trading, let me move my keyboard, horizon is bearish. Why? Because we got offered a 3 drives pattern, and then the third drive, that bullish candlestick up there, right here, grabbed liquidity, right? Now, why am I bearish from a 30 minutes perspective? Again, right here. The reason why I'm bearish from a 30 minutes perspective is because the market pushed through to the upside with that same day trading horizon candlestick right here. That same candlestick that caused the bearishness on the day trading horizon caused the bearishness on the 30 minutes. So the same candlestick, again, let's write it right here. The same candlestick that caused the bearishness on the day trading horizon caused the bearishness on the execution. When that happens, statistically, for me, it doesn't work. According to my system, according to my data, according to my thousands of tested, back-tested data and forward-tested data, I've seen that that doesn't work. When the higher time frame is bearish because of something that exists on the lower time frame as well, when they are equal, it doesn't work. I'll show you another example on AUD JPY. So right here, look at this. I saw this execution a few days back where the market just liquidated, basically, you can see right here. The market pushed down and liquidated all these lows and then it started pushing through to the upside right here. And then I was like, okay, we can get an execution from there through to the upside. We can do that. Then I looked at the TET Capital report and I saw that we are bullish from the higher time frames. And I was like, that's amazing. We can take that trade. Why? Because the execution is bullish and the higher time frames are bullish. But then I went to the higher time frames and I went to the swing horizon and I evaluated why are we bullish. The reason why we're bullish on the swing horizon on a 6 hours, for example, is because the market created, as you can see, all these bottoms right there and these bottoms right here. And the market melted into them and then reversed from here. So this is the reversal. Now remember, we were here. Okay, so this is the reversal that caused the bullishness right there. This caused the bullishness. We grabbed and then we reversed. There's two steps. There's the grab and then there's the reversal. The reversal right here, which is the second step of our setup, is the same as the reversal on the 30 minutes right here that is causing the bullishness on the 30 minutes. And it is the same that was causing the bullishness on a higher time frame. Right here, I was also bullish from an investor horizon, and we looked back and we saw these bottoms, and then the market melted into these bottoms, and then guess what? The reversal, so the first part, which is the grab, is right here. The reversal is right there. This is the reversal. This is why we were bullish on an investor horizon, because we reversed with this candlestick, with this bullish candlestick through to the upside. Right here, up there. And therefore, that same candlestick that caused the bullishness on the investor horizon is the same candlestick that caused the bullishness on the swing horizon, which is the same candlestick that caused the bullishness on the 30 minutes right here. And therefore, guys, that's why I didn't like that trade and I didn't take it. Now, of course, the trade is still hovering around. We still have no results for it, neither a loss nor a win. We'll see how it goes. But I didn't take it regardless. And this is why. Same thing for the instrument that we were just analyzing. The market was creating some bearishness through to the upside. But that bearishness right here, the grab through to the upside, was similar on the 30 minutes as the day trading horizon. It is the same grab. So the same grab that caused the bearishness on the 30 minutes caused the bearishness on a higher time frame, which was the 2 hours, which was the day trading horizon in that case. Since it is similar, statistically, it doesn't work for me. It's usually not a profitable trade. That's why I decided not to take it. Now, what I would rather happen instead is, let's say we grab on the day trading horizon. So again, let me just quickly draw it. Let's say this is the day trading horizon and we grab it through to the upside. So this is the grab on the day trading horizon. Then we go down right there and we grab on the 30 minutes. This is the second grab on the 30 minutes. And then boom, two stop losses grabs through to the upside right here, different than each other's. So the day trading horizon is different than the execution perspective. Now I would like to take that trade even more. So the grab needs to be different and the reversal needs to be different. For AUD JPY, the reversal was similar. For the trade that we were analyzing in this video, the grab was similar. So we don't take the trade. They need to be different. Okay, that's it. That's how I personally look at it. That's through my statistics and my data. And I'll talk to you guys soon. Goodbye.